Happy Monday, folks. It's your skipper here, Darius Dale, to present our macro minute for Monday, May 16th, 2022. Starting with markets, we have stocks down this morning, commodities mixed with agriculture leading, crypto down, dollar down, global bond yields up. Market moving headlines, there's quite a few of them this morning. So you got the ECB coming out, or Francois Villeroy, one of the ECB governing council members, came out and reiterated that the ECB is likely to raise 25 basis points 3 times this year. He said that June's meeting will be decisive with respect to outlining the end of quantitative tightening and the rate guidance. So expect that. We talked about Europe's inflation dynamic decent amount in our macro scouting report last week, and our outlook for European inflation surprises specifically as it relates to potentially starting to reallocate towards duration in the treasury bond market. Clearly, the European rate market dynamic has created some duration risk globally that obviously treasuries have not been able to escape. NATO is preparing to add Finland and Sweden. The expansion of NATO anywhere in Europe is obviously going to prolong the conflict we see from the West with respect to Russia. Germany, they plan to stop importing Russian oil by year end, even if EU fails to agree on an embargo. So continuing to see a bifurcation there as it relates to commodity supplies. One thing I'd flag, the bloc is also preparing to help companies make natural gas payments to Russia without breaching sanctions. So on the margin, that's a little bit more positive. That's not moving in the direction of cutting off European gas, which I think would be the death knell to the European economy, but also be a big death knell to Russia as well, and kind of really cement this the multi-year conflict, if you will, really push us in that direction. India banned exports of wheat. I thought that was a pretty interesting dynamic. We're going to start to see more and more of this as prices really start to eat into not only just consumer budgets, but also fiscal budgets as well, in terms of securing food and energy security. So keep your eyes on more countries doing things of this nature. And from a protectionist standpoint, Shanghai, we talked about China a decent amount last on Friday's leadoff morning note. We'll talk about it again. They got the hard data for the month of April out. Is exactly what you would expect in terms of economy, with 30% of its GDP locked down, under strict lockdown. And on the lockdown, Shanghai appears to be on the brink of meeting its target of 3 days without new cases, new COVID-19 community transmission. So that's positive at the margin. We continue to be seeing signs that we're moving in the right direction finally on the COVID front in China, but clearly not as fast as a lot of investors would prefer. We got Fed speak tomorrow. Powell's main highlight. You got Bullard and Mester coming in as well. Christine Lagarde's also having commentary tomorrow, so expect her to confirm a lot of what we heard out of Villeroy and Pablo Hernandez de Cos as well. And then you got a G7 finance ministers and central bank meeting on Wednesday. We're going to, expect more discussion about sanctions, about how the West can continue to have a united sort of coalition against Russian aggression in Ukraine. So expect more negative headlines. Just again, a sea of negative headlines from policymakers, both fiscal and monetarily. We're also in the wrong part of the growth cycle, clearly in the wrong part of the liquidity cycle. Now is not the time to be cavalier with quote unquote everybody's bearish sentiment trading. Big movers, Bitcoin down 4% again to minus 26% month over month. Ethereum minus 5% to minus 33% month over month. As we always say, hey, you can at any given day, you can lose 100% of your money in any assets. So the percentage change math is not working your favor when you're suffering drawdown. So be aware of that if to the extent you're still levered long crypto. Bloomberg Agriculture Index up 2% on this India wheat ban news. Is up 3% month over month. That continues to be a rock star for those of you investors who are allocated to that. Shifting gears to our volatility adjusted momentum signal and probable range processes. US dollar index bullish VAM still minus 1.3% of downside versus 1.6% of upside in this probable range. Gold neutral VAM still it's oversold with a 6.6% upside, but looks like it still wants to break down on this move in real interest rates. 10-year nominal treasury yield bullish VAMs minus 11 basis points of downside versus 38 basis points of upside. High yield OAS bullish VAMs minus 7.5% of downside versus 8.3% of upside. S&P 500, that is bearish VAMs, minus 7% of downside versus 5.3% of upside. VIX neutral VAMs, minus 24% of downside versus 35% of upside. So kind of a fair fight for the S&P and vol heading into OPEX this week. We talked about that this morning on Twitter, and then obviously last week in our around the horn scatter, or in our around the horn presentation on Saturday in terms of what our thoughts on this particular OPEX cycle. So go check that out. NASDAQ 100 bearish VAMs minus 9.4% of downside versus 7.2% of upside. Russell 2000, that's bearish VAMs as well, still minus 8.4% of downside versus 6.5% of upside. Bitcoin still bearish fams, minus 14% of downside versus 19% of upside. Ethereum bearish fams, minus 14% of downside versus 29% of upside. These things look like dogs. Shanghai Composite, bearish fam still minus 7.8% of downside versus 0.3% of upside. So oversold signal still there. Still watching that closely to give us an indication on whether or not the market is comfortable with the evolving spate of Chinese monetary policy. We saw them take down their mortgage rates a few basis points, but didn't change their sort of medium term lending financing rate as well. So the PBOC continues to be very inactive relative to a lot of expectations about the evolving spate of Chinese monetary policy. So keep your eyes glued there. WTI crude oil neutral VAMs, minus 13% of downside versus 6% of upside, held in pretty well, considering considering everything that we saw last week. WTI as an asset class, both ag and crude oil as ag and energy sort of holding in relatively well given the decline in risk assets we saw last week. Ag neutral VAMs minus 6.2% of downside versus 0.2% of upside. So overbought signal there in agricultural. Be aware of that. And then industrial metals, neutral VAMs, still exhausted to the downside with 11% of upside to the upper bound of its probable range. So with that, Darius Dale presenting our macro minute for Monday, May 16, 2022. Best of luck out there.